All right, now let's go to other matters now in the commodities market. Yeah, we did see that dramatic drop there in the oil market. Let's bring in Dr. Ifeoma Nwokolo, the research manager at Financial Derivatives Company. Great to have you on the show. Good morning.
Good morning, Laddie. Thank you for having me.
Great to have you. So why are we seeing this sharp drop right there in the global oil market?
Well, there's one thing is certain, and we have to acknowledge that oil price is geopolitically driven. Yeah, so no matter what is happening there, it is geopolitically driven, and we don't have control over it. So you see, when there is a geopolitical dynamics, you see oil price fluctuates. We have seen oil price oscillating between $60 and $65 in a few days from now. And funny enough, yesterday it was about $66 per barrel, and this morning dropped to about 64 barrels per dollar. So we shouldn't bother about why the change. We don't have control over the change. I say that because Nigeria does not have control. We are not a price leader. We are not price follower. We are price takers. And we are receiving this shock because we are vulnerable to it, because we depend solely on exports of crude oil for our foreign earnings. And we see that close to 60-70% of our export earnings are from exportation of crude oil. So that is why we are seeing this shock in price of oil. And funny enough, it's going to go further. It's going to decline further because according to the International Energy Agency this morning, they forecasted that the demand for oil is going to drop because of trade uncertainty, which was triggered as a result of the tariff war. Economic activities actually decline. And once global economic activities decline, the demand for crude oil will decline. And once the demand declines and the supply is high, what is going to happen? We're going to have a bearish price of crude oil, coupled with the fact that the Wall Street Journal has also forecasted that oil price is going to go as low as 50% before the end of 2025. And let's not forget that OPEC Plus is also promising to increase crude oil supply by over 4,000 barrels per day. So what is this telling you? It's telling us that the prices of crude oil will continue to decline. It's at $64 per barrel today, and it's okay for us. We are going to manage it because
right.
Our physical break-even point is $60 per barrel. If it goes higher to 70, 75, is a plus for us. It's obviously going to align with our budgets and crude oil budgets for the 2025. But if it goes below 60 or below 50% as projected, Nigeria is going to struggle in terms of our revenue, struggle in terms of fiscal deficit, struggle in terms of weaker naira, and so on. But the most important thing at this point is not even the price. Aside the price of crude oil, how do we manage this revenue from oil?
Right. So, Dr. Nwokolo. Yeah, Dr. Nwokolo, so, definitely from all indications, it seems oil prices are set to be bearish, mostly bearish, in 2025, even from the forecast we're getting from the IEA, from OPEC, and, all of the players, in that market. So, definitely an oil exporter and, a country that's so dependent, on oil revenue, what should we have been doing, yesterday to prepare for this time?
Honestly, there's nothing we can do. We cannot control the price. That's why I'm going. Now, we really don't have control over the price. What we should do, what we should be looking out for is how efficiently have we been managing this oil revenue that we have been getting, so that in times of shock, this is what we keep the economy resilient in times of shock. So there's no magic we have to do. We are not a price leader. We are not price followers. We are price takers. So there's no magic we definitely would have done between yesterday and today. Nothing.
Is there any other export commodity we can fall back on at this time to say, okay, oil prices are going down, let's look towards this other commodity, let's try and ramp up production of that?
Yeah, we can diversify our economy. It's very important to diversify our economy. If you go to agric, the last time our earnings from other non-oil exports increased. And if you look at that, it's mostly exportation from crops, cash crops, like cocoa and the rest, exportation of minerals. But I tell you, we don't just export the raw, we need a value chain where we can benefit more, because it's when you go into value chain, you actually benefit more. It could even help to improve employment level in the country. So we have to diversify our economy. And when we're diversifying, going back to agriculture, using our outputs as, using our output, and this will also boost our manufacturing sector. So give or take, what are we saying? We are saying we should improve our manufacturing sector. Once we improve our manufacturing sector, we are not import dependent. We become less import dependent, and this will help boost employment and other things. So rather than defrogging from agriculture to services. So there's need for diversification. So we don't depend solely on oil. So because it's making us vulnerable to global oil price shock. And that's what we are seeing.
All right, let's look at our beloved currency right now, the Naira. We did see appreciation in the official window, but it seems there's weakness in the parallel market.
Yeah, the parallel market is a market where everyone has access to. So the pressure is in the parallel market, not in the official market. That is why you see that happening. And this couples with the fact of, you see the price of oil. So these are fundamental factors. So why the Naira keeps oscillating is because the fundamental economic factors are weak. When you talk about price of crude oil now, our balance of trade, talk about our reserves, talk about our net FDI inflows, FPI inflows, all of these things, they are weak. So that is why we have this oscillating. In January, we had Naira at about 1,500, but today it's trading well over 1,600. So all of these factors, even though the CBN is intervening, we have the dollars, sales to BDCs, these factors are technical factors that are temporal. They will not last. What we have to do as a country is to ensure that we improve on these fundamental economic factors. Once we have a stronger fundamental economic factors, our currency will be stronger. Coupled with the fact that, let me give an instance of the FPI data that came out a few days ago. We saw that FPI outflow was over $420 billion, which is 251% higher than what it was in first quarter in 2024, which is $119 billion. This is a sign. So it could be the reason why we are saying this. See, our reserves too is struggling. So all of this is impacting on the Naira.
Right.
Coupled with the uncertainty is high. A lot of unknowns. So a lot of people who are buying dollar, keeping their money in dollar as a safe haven.
All right, so, Dr. Nwokolo, I know definitely lower oil prices, that's bad news, when you're looking at revenue, but I'm hoping that could translate to lower fuel prices, in Nigeria going forward. Hopefully, I'm praying.
Yeah.
Well, thank you so much. It was great having you, Dr. Ifeoma Nwokolo. She's a research manager at Financial Derivatives Company. Thank you for coming on today.
Thank you, Ladi, for having me.
You too. All right, let's take a break now. When we come back, we'll see what's happening in the global economy space. That's in a moment. Just stay with us.